Understanding Casualty Losses. Due to Disasters, a guide for California wildfire and recent hurricane victims. The devastating impact of natural disasters, such as the recent California wildfires and hurricanes, can leave individuals and families grappling with not only the emotional toll, but also the financial repercussions. One of the critical aspects of recovering from such disasters is understanding casualty losses and how they can affect your tax situation. In this video, we'll explore what casualty losses are, how they apply to federally declared disaster victims, and the steps you can take to claim these losses on your tax return. Casualty losses refer to the financial losses incurred due to the destruction or damage of property caused by sudden, unexpected events. These events can include natural disasters like wildfires, floods, hurricanes, earthquakes, and they must have been declared a disaster by the federal government. The IRS allows taxpayers to deduct certain casualty losses on their tax returns, which can help alleviate some of the financial burdens following a disaster. To qualify for a casualty loss deduction, the loss must meet specific criteria set by the IRS. The loss must be due to a sudden event, such as a wildfire, rather than gradual deterioration. Casualty losses can apply to personal property, including your home, vehicles, and personal belongings. Can also apply to your business property, including tools used to produce income. If you receive insurance reimbursement for your loss, you must subtract that amount from your total loss when calculating your deduction. To determine the amount of your casualty loss, follow these steps. Take photographs and make a list of all affected items, including their original purchase price and current value. The loss is generally calculated as the lesser of A. The decrease in fair market value of the property due to the casualty. The fair market value of property that cannot be salvaged or restored is 0. B. The adjusted basis of the property, usually the purchase price plus improvements minus any depreciation. If you received any insurance payouts, including assistance from FEMA, subtract that amount from your total loss. For personal property losses, you can only deduct the amount that exceeds $100 per casualty event and 10% of your adjusted gross income, AGI. The rules are different for business property. You may be able to claim your losses on your prior year's tax return, potentially resulting in a quicker refund. If your income was significantly less in the prior year, then your deduction from the loss can be greater. The opposite is true if your income is much less in the year of the casualty. In that case, it may be best to not use the prior year. If you were forced to evacuate and incurred temporary housing costs, these may also be deductible as part of your casualty loss. Your state may have specific provisions for disaster-related losses, so it's essential to consult with a tax professional familiar with state tax laws. Collect all relevant documents, including photographs, receipts, insurance claims, and any correspondence related to the disaster. Complete IRS Form 4684. Use Form 4684, Casualties and Thefts, to report your casualty loss. This form will help you calculate your loss and determine the deductible amount. File your tax return and include the completed Form 4684 with your federal tax return. If you're claiming the loss for a prior year, you may need to file an amended return with Form 1040X. Given the complexities of tax laws and the unique circumstances surrounding disaster losses, it's advisable to consult with a tax professional who can guide you through the process and ensure you maximize your deductions. The aftermath of a disaster like the California wildfires can be overwhelming, but understanding casualty losses can provide some financial relief. By documenting your losses, knowing the IRS guidelines, and seeking professional advice, you can navigate the tax implications of your situation more effectively. Remember, you're not alone in this process. Many resources are available to help you recover and rebuild after such devastating events. Stay strong and take the necessary steps to secure your financial future. Contact me at www.charringtontaxsolutions.com or on Facebook.